back to Knowledge is Key. I am your host, Kei Renee. And behind the camera, I have my greatest co-host in the world, Disco. So let's give everyone a round. Damari, we have real sound effects now. We don't have to do it with our mouth anymore. But yeah, we used to have to do sound effects crazy, but we got some real sound effects. But I hope everyone's having a great day. Today we're going to be talking about something that's going to benefit you if you have a business. You may even take some tips if you don't have a business, but you're going to start one and you need to know about taxes. Taxes is like a big thing right now. And if you guys are waiting for your second stimulus check, you probably got to file your taxes to get them, which they're not telling you about. But that's a little something we might touch on later. I'm not sure yet, but you got to stick around for it. But before we introduce the guest, the one thing that I want to make sure that I reiterate to you guys is if you want to become a part of our VIP community and get access to deals and to the workshops and to all the seminars that we're going to start putting on, you want to text the word knowledge to 21,000. Again, that's knowledge to 21,000, and that's how you join our VIP group and be able to get early access to episodes and all the good. But that's boring. So now let's get into who we have with us today. So today we have Karlton Dennis. He is a tax strategist and a Forbes contributor. So everyone, let's give a round of applause for Karlton.
Thank you so much for having me on, Key.
It's so cool because like your name's Karlton, but you're not like the Karlton from Fresh Prince of Bel-Air. That's like the only one I know.
You'd be surprised how often I get that, and it was important for me to learn that dance at a young age.
You know it?
Oh, it's one of my favorite shows.
Ready?
Are we doing that? Loved by anyone. That is literally childhood memories to my heart right there.
But I mean, Karlton was smart, you're smart, so it's kind of like you guys went in kind of like the same path, you know?
Karlton was also funny too, so I would like to think of myself as somewhat of a comedian.
All right, well, I mean, you could be a comedian, but what you do in like the area, you don't really get to be too, like just kind of serious.
No, you know, dealing with taxes can be kind of serious, but I have a lot of fun with it, mainly just because I work with business owners like yourself. We're doing creative things, and it's all about helping them save money.
Yeah, before we like get into all that, because I want people to know like who you are, and for Damari, he's giving me some water.
Oh, thank you.
For him to kind of know who you are and stuff, or just everyone who's watching, just let everyone know a little bit about who you are, what made you even get into taxes.
Yeah, so my name is Karlton. You know, I've been an athlete my entire life, went on to play football at Cal Poly San Luis Obispo, didn't end up going on into the NFL, decided to get a career in sales. After learning that I was a great salesperson, decided to join my mother's firm and sell tax planning services. Ended up making a lot of money, got my tax license, became a tax strategist. Fast forward now, I get to work with really cool entrepreneurs, celebrities, football stars, basketball players, and I just like connecting with people and helping them understand a little bit more about the tax code because it's really what holds you back from really building wealth.
Tax codes. All right, let's just start with taxes in general.
Yeah.
So, because I'm learning more and more and more, like as I'm like doing stuff, and even with like all these taxes and stuff, like there are certain like sales tax you got to pay, but that's not actually your federal tax, but that's not actually your business taxes, and then it's like, oh my God, it's so many. So how many different types of taxes do business owners need to be like knowing that there's all these ones?
Yeah. So business owners need to be mindful of three main forms of tax. There's federal tax, state tax, and then there's this self-employment tax that business owners pay until they become either an S corporation or a C corporation. So those are the main tax. Until you get into selling like products online, then you can worry about sales tax, which is actually kind of small. It's not that big of a tax.
It's tiny.
Yeah, it's tiny, but it can start to pile up when you're making a lot of product sales online, like my Amazon sellers. So
yeah. So break down the difference, because I mean, here's this, and this. So what's the difference between all of them?
Yeah, absolutely. So we have the government, right? The I, the R, and the S. Those are the federal government people that tax us the most. And then if you're living in a state that taxes you, you're going to be taxed by the state as well. Right now, there are 9 states that don't have state tax. So if you don't live in any of those 9 states, you're dealing with federal taxes and state taxes. Now, let's say you decide to become a business owner. When you become a business owner, the government realizes that no one is withholding Social Security or Medicare taxes or unemployment taxes from the money that you're getting paid. Yeah. So they want you to pay into that. That is at 15.3% on top of your federal taxes and on top of your state taxes. So being a new business owner, if you don't know anything about self-employment tax, you could end up showing up to your tax office and getting shot in the foot with a huge tax bill that you're not even prepared to pay.
Yeah, that's crazy. Have you dealt with this yet? Because you looking bewildered. If y'all can see what Damari's looking like, he's looking like hell to the no.
All I gotta say is, I owe the IRS.
I concur. No. I know somebody out here watching this like
That is
me
hilarious.
Too. But I mean, owing the IRS, it's not that bad, or not as bad as people seem, but you just don't want to let it pile up.
Yeah, and people think that the IRS are out to show up to your doorstep looking for the $10,000-$15,000 you owe them. IRS really goes after big fish when they want to show up to people's doorstep. However, if you start becoming delinquent, which means you're getting a lot of notices and you're not responding or doing anything, that's when they can start to take action. Maybe they will garnish your wages, God forbid, or maybe they could even put a lien on your home so you can't sell it.
And that's even with your business.
And this is even if you're a business owner. Yep, they can find out where you live, get your taxpayer information, and they can even go to your husband or your wife if you're married and start garnishing their wages from their employer.
Yeah, that's why ladies out here, and maybe some gentlemen's, pay attention to his finances. Because you don't want to say I do to his debt. No, but like
that's a huge thing, because most people, when they get married, they want to file joint, because joint actually puts you into the lowest tax brackets. The government incentivizes people who file married filing joint. Yeah. But let's just say the person you marry has past tax debt. When you file your tax returns, your refund could end up going to their past tax debt. So you want to make sure that you know who you're getting into bed with, who you decide who you want to spend the rest of your life with. So
figuratively, liberally, that might be a word.
Can I ask you this question?
Absolutely.
Can we back all the way up, right? Why and what are taxes, and why do we even have to pay taxes?
Oh, okay.
That's a good one. So if we're gonna go all the way back, we have to go to a little bit of history. But history can be boring, so I like to simplify taxes first. You know, when you walk outside this building that we're in Los Angeles and you see those street lights flicker, they turn from red to yellow and to green, right? It controls us. And you know, when you have your phone and something were to happen, such as an emergency, and you call 911, police shows up, right? Or if we were to have a fire, like some of the fires we've experienced in California, there's firefighters to go there and actually put out those fires. Can you imagine if we had no police officers showing up in our need? If we were dealing with a robber breaking into our house, or if we were driving down the road and there was no street lights to stop us, and that there was car accidents and we just had to look over our shoulder all the time. So taxes goes to the city, the government, for these reasons. But taxes also go for military, right? Back in World War II, we took the dollar off of the gold standard. And when we did this, the Federal Reserve started printing money, okay? And then we started paying taxes more, right? And we started taxing the wealthy. Right. And then the tax code started changing. Taxes has always been in effect because we wanted to speed up the war. So they started taxing people more to speed up the war. Okay? So, okay? Yep, let's get this war over and done with. So that's a little bit of the history. Hopefully it kind of makes sense. I know taxes can seem kind of complex, but those are the reasons that I think of when I look back to tax history.
So I do have a question in regards to that. So when we're not at war, and I know, our government military is always working around the clock, so on and so forth. But when does it get to a point where it's like we have X amount, so there should be like a lowering in taxes, or there should not be taxes paid, or
we got enough.
X, Y, and Z.
Yep. So I understand where you're going. So this is how the government looks at it. When they started writing the tax codes, they said, we're going to help out certain people more, and then we're just going to help out certain people less. If you start a business and you start employing people, we're going to help you out more. Here's what I'm going to allow for you to do. Maybe you have a vehicle. I'm going to allow for you to write off your vehicle. Maybe you have a cell phone. I'm gonna allow for you to write off your cell phone. Maybe you have a laptop. I'm gonna allow for you to write off your laptop. If you have personal expenses, you can convert them into business write-offs if you start a business and you start hiring people. Why? Because you're stimulating the economy and you're creating more taxpayers. However, employees, they don't get tax benefits like business owners. Why? Because employees show up to work, and no matter how hard they're working or not, they're getting a paycheck every 2 weeks or every week. They get benefits such as health insurance for themselves, their children, their wives, dental insurance, eye insurance. They get all of these benefits, a 401k where the company gets to match. The government realizes that you're protected underneath a business owner. So naturally, they're going to limit the amount of write-offs you get. So employees feel like they're taxed. 95% of Americans are employees. Yeah. They feel like they're overtaxed. Right. It's not that they're overtaxed. They just haven't taken that step to learn more about business.
So it's essentially like employers or not employers. Employees are people who are working, the 9-to-5ers. Yeah. They're being taxed for comfortability. They're being taxed for having a blanket, and they're being taxed. It's like the person who's their shepherd. Yeah, they're being protected by the government because they're like, you are herding all these sheep, and these sheep rely on you, so we have to take care of you.
Yes, that is exactly correct. And guess what happens when you become a really big business owner?
You get to be Donald Trump.
That's when the government starts loaning you money to continue to do projects, and you start reducing your tax bill even more. You know, big business owners get to a place where they can become tax-free because of the amount of giving they do, right? They become philanthropic, but then they also are providing more benefits to their employees. I now have 60 employees instead of 6 employees, so maybe I'm going to offer this amount of benefits. And you have to realize the more they offer, the more that the employer gets in tax deductions. And it keeps his employees working harder, making more money for the employer. And circulates. Right?
It's interesting, right? That's we had. No. It'll be underneath my voice.
That's a lot for me, and made me feel like.
Look, even they felt it.
There we go.
But that, I don't know, that just made me kind of feel a little better about paying taxes. I'm not gonna lie.
Better?
Yeah.
Okay.
It makes you understand.
It makes me understand. I don't feel like at first I
kind of
just, like most people, I'm just like, why the fuck you taking
money out of my check?
You taking 25% of my check. Like, what the fuck
it
is
hurts.
going on here? You know
it hurts.
what I mean? So I get it a little bit now. You know what I mean? I get the idea behind it. Like if I was sitting in their seat, I'd be like.
So let's talk a little bit more about the state side, right? We live in California. So California is one of the highest tax states, but California is also one of the most desired states to live in. Why? Because we have a lot of great things here. You see our building structures, there's amusement parks. We have so much tourism that comes here. And there's also roads and things that are being built all day, every day in California that keeps Californians happy and wanting to stay here, right?
But isn't this like the worst place to register a business?
It is one of the worst places to register a business because you're going to pay the highest in taxes.
Yeah, so it's like the craziest.
But whether you register your business in California or you register it out of state, if you're a California resident and you register it out of state, you are still going to be subject to California taxes. Okay?
Because isn't it technically where you make the money, not necessarily where you register?
That is correct. The government cares about where you earn the income. And if you earn the income in the place that you're domiciled, which means more than 6 months, 6 months in a day, then that's where you're going to be.
And what's the word again?
Domiciled.
Domiciled.
Mm-hmm. Dun, dun, dun.
Domiciled.
And that's what the government cares about.
Okay.
Absolutely.
And I know that there are a lot of entrepreneurs who are traveling and they go different places to make money and they're doing different things. So when they are filing their taxes, what do they need to be paying attention to when they're filing their taxes if they worked like in maybe 10 different states that year?
Yeah, so bookkeeping and accounting is the most important thing, not only to the taxpayer, but to the tax accountant, because in order for you to make sure that you're not overpaying on your taxes, someone has to account for all the income and all the expenses, and they need to make sure that they're doing it at least monthly, or you could be missing items. There's so often when business owners are making so many transactions that they don't remember what that transaction was for, and they don't have the receipt. If you're in a situation like that, really, you shouldn't be taking that deduction, because if you get into an IRS audit, you're going to be in a very difficult situation trying to prove the expense.
You can audit back like 3 years, or how many years?
The IRS can audit you up to 7 years.
7, okay.
Yeah, that's correct.
So you need to be paying attention and holding on to receipts for at least 7 years back in your business.
Yeah.
And I seen this article that you wrote in Forbes, and it was talking about being able to write off eating and how you need to business meals and dinners and stuff like that. So if you want to, do you want to like touch on that? Because I think that's kind of important. We do go out to eat a lot. We do a lot of things where we're discussing, and maybe someone didn't know that they could actually write off that dinner, but you have to write it off a certain way to make it make sense.
I actually am a big foodie. So if you guys ever jump on my Instagram page, you'll notice that I am always posting always posting about food, and I always go out and eat. So one of my favorite deductions is the business meal deduction, and what it is it allows for business owners to take a deduction for 50% of their business meals. One of the most important things, though, to understand about a business meal is that you need to keep the receipt, but you also need to do some additional things outside of just keeping the receipt. There are 5 steps that are extremely important. The receipt covers 3 of those steps. The receipt gives you the date of when you ate, it gives you the time of when you ate, and it gives what you paid for. Now, who you were with and what was discussed aren't on the receipt. So I urge you to save your receipts and write that on the back, so that way in an IRS audit, you are always protected. Now, a part of the CARES Act that was just implemented and this new COVID relief bill, in the year of 2021, you are able to take 100% of your meal deductions. This was written in the new bill.
Say it again.
100% of your meal deductions, if you're a business owner, this was written in the new bill to help out restaurants and fast food chains recover from the effects of COVID-19.
But how does that help the restaurant recover?
So if you're a business owner and you're going out to eat, you're more inclined to spend more money if you know you can write off 100% of those meals. So you may be more encouraged to even go eat out more if you know that 100% is deductible as opposed to 50%.
Now, when you say write off, because I know some people might be like, okay, so what does write off mean? So when I'm writing off 100% of my meal, what does that mean? That I'm getting all that money back, or is it just that money's going to go and deduct from what I owe in my taxes later?
This is probably the most important thing for business owners to hear if you're watching this. A write-off does not mean that you're getting the money coming directly back to you. So if someone tells you, oh, I'm taking it as a deduction, I'm taking it as a write-off, it doesn't mean that what you spent, whether it's $1,500 or $50,000, that money is coming directly back to you. What that means is that the amount of money that you're taxed on, whether it be $100,000 or $50,000, a deduction is just going to reduce the amount that you're actually going to be taxed on. So if I made $100,000 and I have a $10,000 write-off or deduction, same thing, then I am now taxed at $90,000. There are 7 different tax brackets that go all the way up to 37%. So if you fall into one of these tax brackets, you can see how it will affect the outcome of the money you actually get back in a version of a refund.
Yeah. That's important to know, because I think when someone says, oh, I'm going to write this off, they think that means if I'm spending $50 at the end of the year, because people, may not understand that taxes for businesses receiving funds back, and taxes when a person, just a regular, what is it called? I don't even remember. That's how long I
1099.
1099.
There you go.
The other one, W-2.
W-2.
Okay, W-2, when you have a W-2, most people who file W-2s are getting money back.
Correct.
They're getting $10,000 back. They're getting
because they overpay on their taxes.
But it's business owners, we're not saying I'm getting back $15,000 just because I went in.
Nope.
No, it's totally different.
They owe. Business owners owe.
Yeah.
And the difference is because as an employee, again, your employer, right, is withholding certain taxes from each paycheck that you're receiving, and that is going off. And if you are a business owner, you're not having any taxes being withheld from every paycheck you're receiving. So you have to be so mindful of managing your money, because at the end of the day, a portion of it is going to go to taxes.
It doesn't belong to you.
Unless you just spent more money than you made money, then you're in a business where you're not profitable.
Is there like a small formula that maybe you have to share, whatever, maybe like something that you used to do that allows you to prepare and put aside your, like the tax and the funds that you owe? Like you have like a little rhythm or something that people could do to like prepare themselves so that they're not like spending it and they're like doing stuff with it?
So the best thing to do is to print out, this is very easy to do. I mean, anyone can do this. If you log online and go to Google, you can type in the new 2020 tax brackets and print it out. It'll be 7 different brackets showing you the different percentages. And if you're doing your bookkeeping and accounting on a month-to-month basis, you can go into your bookkeeping and accounting, look at your net income, the amount of income after all expenses, and multiply it by your marginal tax rate to know exactly how much money you would owe. Yeah. That way, as you go throughout the year, you can start budgeting for your taxes without feeling like you have to always call your tax guy. Yeah. This will allow for you to do a little bit of simple math.
Yeah. And are there, because I know with like certain CPAs, I feel like, I just started using a CPA last year, and I kind of still feel like there's things he did not get, like, you know. So what is the most common thing that business owners forget to include in their write-offs?
I think that the most common thing that doesn't get asked by tax preparers that business owners miss is how to write off your vehicles. There's different ways in which you can take vehicle deductions, but it seems like most of the taxpayers that come into my office are just taking mileage. No one is being mindful of the fact that you can leverage various different vehicle deductions, including the 179 vehicle deduction. That's my favorite write-off. Okay. That's where you're able to purchase a vehicle that weighs over 6,000 pounds, and you can write off that vehicle all in 1 year, whether you financed it or not. Let me tell you about this, Kei. I had this client who came into my office in December. She called me while she was at the Mercedes dealership. Yeah. She then turned the call into a FaceTime. Now I was on FaceTime with her, and we were literally just discussing which vehicle she should purchase. She said, Karlton, should I buy the car? Does it make sense? Based on her position, we went over the scenarios, and it made sense for her to purchase. Sometimes I recommend leasing, but it did make sense for her to purchase. But what I told her was, hey, if you have a family and you have this business, try to purchase a vehicle that weighs over 6,000 pounds.
What kind of cars weigh over 6,000 pounds typically?
So the Mercedes G550, which is the G-Wagon, weighs over 6,000 pounds, and the Mercedes GLE model, which is what she ended up going with. Okay. She ended up buying an SUV that weighed over 6,000 pounds that cost around $130,000. She put about a $20,000 down payment. I'm writing off $130,000 on her tax return. She's not going to pay any taxes this year.
Tesla way.
No, he just bought a Tesla, so he's like, "Hell, you got the wrong one."
The Tesla Model X is over 6,000 pounds. Yeah.
Which one do you have?
The Y.
Okay, yeah, the big one is over 6,000 pounds. Yeah, that would give you a pretty big write-off.
Well, what about when you put stuff in it?
Crazy. So that's crazy. So if car over 600,000 pounds, you can actually write it off. 6,000.
Yeah, 6,000.
It's a big ass number. That's kind of interesting.
Yeah.
I guess get that G-Wagon, y'all.
Yeah, you want to make sure that you're always checking the new 179 list. It gets updated regularly. Make sure that you reach out to your tax accountant, or you guys can follow me on Instagram. I'll share that list with you, so you have the 179 vehicle deduction list.
That's awesome. I mean, I might have to. I mean, I just got one, but I might have to get a $6,000 pound.
It's in the works.
Yeah, that's awesome. So cars not being written off properly. So okay, let's shift, because right now, of course, we're in a season where I feel like taxes are going to be a little different because of everything that was happening in 2020. So for business owners who maybe got like grants or got some of these loans and some of this funding that was given out, how should they be approaching their taxes for 2021? Because of course it's going to be a little bit different, I would assume, right?
Yeah, absolutely. So, it's really going to be interesting for the people who took in PPP loans and EIDL loans. Because if you took in a PPP loan, a portion of that money was supposed to go into payroll. So the government is going to be auditing people for payroll if they weren't compensating themselves appropriately. So I know that that's going to be a big issue coming up. And then mainly, there were some people who received stimulus checks that didn't qualify for the stimulus checks.
They're going to have to pay that back.
There might be a payback that occurs on the tax returns. We are receiving the new forms as of right now as tax preparers. So we will now be notified of whether or not those people are going to have to be subject to taxation on that money.
Yeah, I think it's going to, what?
Y'all
better get ready. No. I think it's going to be different because I just felt like there was going to be something a little bit different because there were like different breaks. Of course, you said like with the mill tax break, that was a part of the CARES Act.
That's correct.
What other important what other important like tax breaks happened in 2021 or 2020 that are going to affect 2021 tax returns for businesses? Or was there anything else like special that we probably missed?
In the real estate side of things, there are certain advantages for real estate investors who made certain repairs and expenses in the year of 2021 where they'll be able to write off pretty much 100% of those repairs and expenses to benefit themselves from avoiding a huge tax bill.
I feel like this year is like going to be all about making sure that you're sitting with the right person.
I agree. And the most important thing is understanding that there are those who just do tax preparation and those who do tax planning. And the difference is tax preparation is just taking your documents into your tax guy and he puts everything into the computer program and spits back out a copy of your return, right?
Yeah.
That's tax compliance. Whereas tax planning is where you're sitting down with your tax preparer, but he's also doing some tax strategy. He's asking you certain questions about your life, your family, your business, where you see yourself going, your retirement. So that way he's creating strategies around your lifestyle.
Yeah.
So when you go in for the tax appointment, all you're doing is just handing over documents. There's very little conversation.
Yeah. That's crazy. I feel like taxes in business, I mean, sometimes it could be scary. Of course, like if you're like new and you're like, oh my goodness, I gotta pay taxes. There's like so many things. What do you say to anyone who does get anxiety when it comes to like tax and stuff? And what do you like advise for them?
Okay, don't be fearful about taxes. Not that it's not important. The reason why I don't want you to be in fear of taxes is because there are things that are far worse. The government isn't coming after you the way you may think they might be coming after you if you haven't filed your tax returns. They're not standing in a office just, looking at a picture of you ready to go over to your address. They're not, researching your children and how much your children are making in their little jobs. They're not doing that. You need to get your head above surface if you haven't filed your tax returns and get in what's called tax compliance, where all of your returns are repaired. Then you can negotiate if you owe. That's when you do it. And if you owe less than $10,000, you're not going to be able to negotiate. You're going to have to get on a payment plan, or you're going to need to look back into those returns and see if there's anything you can correct to reduce your tax bill. And that takes a tax strategist.
How far back can you go and revise taxes?
The IRS allows for you to amend tax returns up to 3 years. So if you need to, you can go back. You can go backwards.
I don't know if they're gonna be able to hear your your antics back there.
Damn. 2016.
I'm fun. It's cool. Like I'm getting. Even for me, like I'm getting better with not being anxious about like taxes and stuff.
Yeah.
It's not as bad as it seems. It's just a matter of the different dates. Because of course, with businesses, your taxes are due from I think my thing was like October to July or something. Yeah. Like it's like so many different ones where it's like not the same. My taxes are due on I think it's like July 19th or something.
July 15th. Yeah, your estimated tax payments is what you're referring to. Yeah, business owners have estimated tax payments, which W-2 employees really don't even have to worry about. But those business owners who do make those estimated tax payments, they end up getting into a position where they're not owing so much come April 15th or March 15th if you're a corporation or a flow-through entity.
Okay. So what happened?
I do have a question, right? You touched on earlier that they tax you on where you actually made the money, correct?
Correct.
What if you're doing business online? At that point, can they figure out, okay, he's actually making it in California, or is he making it in Ohio?
Or where people are maybe purchasing it at.
Right.
Or I was gonna say, does it matter about the purchase or where the money goes, or what
So this is really important. This is where that sales tax actually comes into play. A lot of business owners think that if they have an online business that they can set up their business from anywhere since it's online and it's the business running, right? And I'm just an owner of the business, so I can be wherever I want to be. Yeah, but not really. If you are a taxpayer, legally you have to be domiciled somewhere, which means that you have to live somewhere and report income somewhere. So if you're an owner of that company, where are you reporting income? The place that you're living 6 months and a day. And if that's in a state that has state taxes, then you're going to be subject to the state taxes in that state, and you'll also pay federal taxes as well. Sales tax comes in based on products that are being sold in various different states.
Interesting.
So, that being said, what are the best states to live in?
No.
That is so good. You know, a lot of people have migrated from California, and
I know Kansas is good.
Kansas is not a state that immediately comes to my mind. I was going for more like Florida or Texas and Nevada. Those are definitely the more hot states that we're seeing people move to, just because Texas is just so popular for growth right now. Big tech companies are moving there. Jobs are popping up left and right. There's affordable housing. People are getting there and getting into places that actually have, you know, real estate and square footage, unlike California. So,
unless you're in the valley.
Yeah, unless
we get the square to the foot.
Yeah, unless you're in the valley in California, you're going to be on top of yourself with another tenant underneath you. So, you know, I think Florida is also a great destination just because the weather resembles California. I think a lot of people like getting out to Florida. And then there's just no state tax, so you gotta love that.
I love Florida.
Yeah.
And I love everything we just talked about today. I feel like if we went any deeper, any further, like you would have to send me an invoice. So I want to thank you so much for, you know, coming all the way out here. You drove very far, so I appreciate that. Well, to me, you drove far, because I don't go out.
You're just a jog and a skip away.
2 skips.
I appreciate you bringing me on the show, and this was fun and unique. And I think that, you know, anyone who's viewing this today, don't be afraid of taxes. Approach it and learn more about it, because it is a game that the wealthy play.
Yeah.
And as soon as you learn the game, as soon as you can protect your wealth more and build a legacy you're proud of.
No, you'll be extremely proud of it. And for you, I want you to like tell everyone, you know, what type of services that you offer, because I know tax season, you know, well, tax season to me is all the time. Like you should always be prepared for tax.
So my company, we prepare tax returns in all 50 states, as well as tax planning, bookkeeping, representation if you need to fight the I, the R, and the S. And everything in between, from consulting to setting up a corporation to setting up a foundation. So if you have any questions and would like to schedule a free consultation, you're more than welcome to visit the link that we might have around here. Or
He knows the drill.
And I look forward to chatting with you.
Cool. Well, thank you so much for coming into Technology's Keys School of Knowledge.
It was a pleasure. Thank you for having me, Kei.
And thank you guys, everyone, for tuning in. Damari, do you want to say something to the people other than telling me to go to this other camera? Nope. All right. Well, we'll see you guys next time. I'm Kei Renee. Disko's behind the camera, and this is Knowledge is Key.
Woo!